Let us begin. So a very good morning, good afternoon, everyone, based on your time zones. And this side, the CEO of LAFFAZ Media, Mohammed Hasib. And I welcome everybody into this webinar on the future of fintech in MENA. So primarily, I would like to thank Microsoft for Startups Middle East and Andra Public Relations, and obviously all the speakers for supporting and empowering us in conducting this webinar that brings together all the industry leaders and experts to discuss the challenges, innovations, and opportunities in the fintech sector. To lead this session, as for the attendees, we have Mr. Hossam Arab, who is the CEO and co-founder of Tabby, a Dubai-based fintech startup that offers buy now, pay later options across online and offline stores. Hossam was previously the CEO and co-founder of Namshi, one of the leading e-commerce players in the Middle East. Then we have Mr. Mohammed Vifati. He is the founder of MEES, a Bahrain-based fintech company that offers innovative digital lending solutions across the MENA region. MEES is also a member of the IFC SME Global Finance Forum, and the company is recognized by the World Economic Forum as one of the top 100 startups in 2019. We have Mr. Zaid Husban, who is the CEO and co-founder of POS-Rocket, a Jordan-based fintech startup that offers a cloud-based POS solution to modernize the way businesses work and process daily business transactions. Next, we have Mr. Kevin Kulti, who is the founder and CEO of HubPay, a UAE-based digital wallet provider that enables both remittance and international bill payments in the UAE. And the company is planning to expand across more geographies very soon. And we have Mr. Mohammed Al-Sadi, the CEO and co-founder of MamoPay, a UAE-based digital money transfer platform. Previously, Sadi led Google Play's operations in the MENA and Turkey region. He is also a sitting member of the investment committee at the Dubai Angel Investors. And last but not the least, our moderator for this webinar, Mr. Roberto, who is the managing director of Microsoft for Startups Middle East. So talking about the structure of the webinar, we have 4 sessions to be led by respective speakers, and Mr. Roberto will be asking some questions to each speaker individually. And after that, we'll have a Q&A session in which I'll be putting questions to all speakers individually. And those questions will be asked by our attendees who are attending via Zoom or YouTube. All attendees can put forward their questions in the chat panel and Zoom or YouTube live comments, wherever they are attending from. All right, so let's begin. Over to you, Mr. Roberto. Please start the session. Roberto will be asking some.
Cool. Thank you so much. Thank you so much, Mohammed. And let me just thank you yourself and LAFFAZ Media for collaborating in setting this webinar up. So as you were saying, fintech is booming in the Middle East and North Africa region, is representing probably one of the hottest industry in the region. If you look at the, the number of deals that have been through in the last years, fintech definitely represent the highest percentage of the total MENA startup funding. And within the MENA fintech industry, payments remittances vertical has received the most funding. So great to have a panel of awesome founders that represent this industry in the region. As Mohammed was saying, the structure today is 4 sessions. So the first session is about the buy now, pay later, which seems to be the hottest trend in the MENA fintech space. Hossam, very nice to meet you. I would start from you. So how is the buy now, pay later avenue different from the traditional installment options provided by the banks?
Sure. So first of all, thanks for having me on. Thanks, LAFFAZ. Thanks, Roberto. So how it differs is in a number of ways, right? So today, what we have is a ecosystem where credit card penetration is decent to okay in the UAE. It's quite low in other markets like Saudi and the rest of the MENA. However, what credit cards and banks offer today is a interest-based with heavy kind of obstacles to access credit for most participants in the economy, right? So when we look at an application for a credit card, it's quite lengthy. There's a lot of questions involved and quite a lot of screening. on the type of person that has access to credit. So I think that's one of the obstacles that we're seeing in our region, more so in a country like Saudi Arabia, where there is also an aversion to credit as a whole. And I think what we're seeing as well is the younger, more digitally savvy consumer is shying away from credit in its traditional sense. So I think that's kind of the backdrop to credit in the region today. But then how we differ as a buy now, pay later solution is the fact that we are pushing the cost onto the merchant rather than onto the consumer. So in the traditional sense as well, you buy you get a credit card, you go and make a purchase, and if you want to purchase in installments, then there is a cost attached to it in shape of interest. But then there is additional fees that are hidden or not really hidden in the sense of cancellations and early payments and so on and so forth. So what we're trying to say here is it's a very transparent product to the consumer that offers significant value to the merchant, and as such, it becomes quite attractive. I think the additional point over here that I'd like to make is with BNPL, what we go to merchants with is to say that we are bank agnostic, card agnostic, right? It doesn't really matter which bank you are banking with or which credit card you hold, as opposed to today when you go to a store that might offer 0% installments, for example. There needs to be a direct link with that bank of that credit card, and you need to be a holder of that card, right? So it's quite limiting, and therefore the merchants just essentially don't end up seeing the value at all of these installment products. So that's kind of the backdrop and where we differ from traditional credit today.
And this is great, Hussam. In light of Tabi's offering, then what are the benefits involved for the users specifically?
Sure. So the users, we look at two types of users, right? One is the merchant that is offering buy now, pay later, and the other is the end consumer that is utilizing that offering. So on the merchant side, what we say is, as opposed to a traditional payment method, and we try to position ourselves as not as a payment method, however, as a customer acquisition tool, we offer these merchants the ability to offer customers a installment or flexible payment method where we take the risk. We take the risk on the consumer. We assess the consumer based on a number of behavioral and credit factors, and based on that, allow them to complete a purchase. And what that offers the merchant is significantly better conversion, because now a consumer is more likely to transact once they have a flexible payment option that splits their payment into multiple installments, but also a higher basket size because as well for the same reasons, right? Moreover, over time, we become a source of new customer acquisition for many of these merchants, right? So today, obviously, we're still in our early stages, so we can't justifiably go and say that we're going to drive customers. But over time, that becomes one of our big value adds for merchants because customers end up looking for these payment solutions over time. And a key point over here as well is what today, the tools that a merchant has to drive and incentivize sales and get people to buy are fairly expensive tools. They either discount and promote, and these are quite expensive, or they invest heavily in marketing. What we're coming in and saying is we're a significantly cheaper option to acquire customers, right? It's a couple of basis points above your regular MDR, as opposed to 20 percentage points of margin that you'd give up to discounting. So that's on the merchant side. On the customer side, what we're saying is it's a completely free, very seamless, very integrated checkout solution that takes no time for you to set up, right? So there's no kind of credit application that you need to wait for and call your bank and so on. And we allow you to split your payment for absolutely no cost whatsoever. Now, one more point just before I end is on how we differ from traditional buy now, pay later payment methods as well globally, is we offer an alternative payment method, which we want, or our aim is to replace cash with, right? Which is a pay later method As we all know, about 60 to 70% of transactions in the region online are carried out via cash and cash on delivery, which presents a huge obstacle to e-commerce growth. And so what we've come to merchants with is an alternative to that, to say, so we'll take care of that risk. A customer wants to receive their product before they pay for it. And so let's allow them to do that. Let's assess that customer based on their behavior. We'll take the risk as long as you deliver. And we'll take care of cash, of collection, of payment collection from the consumer, and make that a completely digital experience, removing the cash from the equation.
That's very interesting, Hussam. One question is, because of course this model obviously looks attractive from the user hand, right? So even if there might be segments of at-risk client or vulnerable consumers that might get side effects of this type of product, right? So I guess it would be interesting to get your perspective on that in terms of where we are at with regulation. For that kind of segment.
Yeah, sure. So I mean, it's obviously very important to ensure that there is no moral hazard over here by extending credit to people that cannot handle excess credit, right? So the way we go about it is actually quite in a very phased and measured approach, in the sense that we look at what this customer has bought in the past and whether they are a customer that is used to making such transactions. We limit the size of the credit that is available to the customer. So we're saying it's to a certain extent, it's microfinance, in the sense that the size of the tickets are limited. We're also limiting the type of products that people are buying. So we're not going out and saying you can go and buy an iPhone or a laptop. It's much more need-based product, where a customer, it's the opposite of need-based. It's basically luxuries and things like that. So I'm going out and buying a pair of shoes or a dress shirt or a dress for a lady, or a baby product. These are all products that I kind of need today, and therefore I'm less likely to default in this type of product. Right? So that's how we think about it. It's much more, again, we're assessing consumer behavior rather than looking at typical traditional credit measures to assess who we give that funding to. But then we also look at repayment behavior for the customers. So if there is a delay in a payment, then we don't allow the customer to continue buying until they repay. If a customer defaults a number of times, then they lose access to the product itself, right? But so it is very important to while we're trying to give customers that flexibility, we also want to ensure that there is no more hazard.
Absolutely. Thank you so much. We'll come back to yourself and the buy now, pay later model in the Q&A. Let's move on the second session, which is about banking as a service and digital lending. So we have Mohammed on the panel. Great having you on the panel, Mohammed. So a question for you to start on this session is, with the need of digital lending platforms, banking as a service domains are emerging across the MENA region. At the same time, this involves certain risk factors, such as sharing of user data between institutions. So how is MESA bypassing these risk factors?
Thank you very much. It's a pleasure to be here. It's a privilege to join you in this session. I think to address your question head on, we as a company, we work obviously with banks within the confinement of their regulatory protocols. So we have to abide by the restrictions that banks tend to face, depending on which jurisdiction, with which regulator that they're operating under. But I think in general, what we found is that there's a lot of fintech applications that can help ease some of these concerns, specifically with eKYC. What we're seeing in the region right now is that more and more regulators are accepting the eKYC protocols, and this allows us to have much more effective methods of onboarding clients, profiling them in an effective way, and also segregate that data in a way that it doesn't create any risk from a compliance perspective. Also, I would note that we as a company, we adopt our digital lending solutions mostly on blockchain, and that enables us to apply blockchain technology, where it allows us to issue private keys to different parties that work with us, and therefore that enables us to mitigate any potential issue of sharing data across different parties. And also my third point would be working with some of the cloud providers, such as not to name drop, but such as Azure, where we work quite a bit with Microsoft Azure. There's some applications there with regards to confidential compute and so forth that can help you a lot in terms of sourcing data from multiple stakeholders and segregating it in a way where there is no risk of overlap, and maintaining data anonymity and confidentiality and so forth. So I think with regards to the risks of data sharing, there's a lot of technology out there that helps you do that. It's more of an operational issue and compliance issue working with the counterparty banks that we operate with as a MEES.
Great, thank you, Mohammed. And how are digital lending solutions for MSMEs improving banks' ability to reduce costs and risk associated with SMEs loans?
So we as a company, that's one of our key focuses in the region at the moment. We're operating across 4 jurisdictions actually, in North Africa and also in the Middle East. And a lot of our real focus is really how to support banks to unlock credit portfolios to small merchants. And what we found in our brief journey over the last, I think, 12 months focusing on this domain is the following finds. First of all, in countries like Egypt, for example, where the central bank has pushed aggressively the regulations to allow the commercial banks to lend more to SMEs, it really is a loan administration cost issue. So from the bank's perspective, acquiring new clients, administering these loans in the conventional way is very ineffective from a cost perspective. So when we apply solutions such as smart contracts, for example, we enable to disperse those loans and administer those loans digitally and in a much more effective way from a cost perspective. So that's the first find. The second find is that it's more to do with credit risk and underwriting. And with commercial banks, I think a lot of what we're trying to do and what we're finding in our sphere of focus is that they appreciate the fact that you can use alternative data sources with machine learning algorithms so that you can further enhance the ability to underwrite credit risk. And especially with regards to MSMEs, that's an important detail. And I think looking at some of the markets in the region, I think we'll see a lot of, especially post-COVID, we'll see a lot of focus on MSME lending and a lot of focus on how do we optimize the costs and underwrite the risks associated with SME lending. And I think it's not just banks, it's also microcredit institutions. We have started actually developing quite a good relationship with a few microcredit institutions, and that allows us to broaden the sphere and the differentiation when we work with MFIs or microcredit institutions, that they're more accustomed to credit risk, but they have a lot of costs again associated with their loans. So again, applying digital technologies allows you to reduce that cost. And I can reference, for example, since we're talking about Bahrain, Bank Ibda in Bahrain is one of our dear partners, and we have a very interesting case study coming up with them at the moment, which I'm not allowed to talk too much about, but it's an example of us partnering up with a microcredit institution to reduce the cost of onboarding, of loan administration, and of addressing the credit risk.
Great. There are definitely cost efficiencies there in all this approach. And going just for a second beyond digital lending, fintechs have been able to leverage banking as a service to offer innovative services and access to underserved market segments globally, such as the unbanked or the underbanked, or SMEs, business owners, immigrants, etc. Right? Just to give an outlook to the people attending today towards the future. So where do you see areas of focus within banking as a service? So we have seen delivering virtual bank, or standalone bank accounts and services, or upgrading outdated infrastructure of legacy banks. And then, bank as a service can drive also open banking. So what's your point of view on that? Or where do you see this going towards?
I think it's safe to say that there's an emerging trend in the region. There's a lot of digital banks emerging, whether it's challenger banks or neobanks and so forth. And I think what we've noticed in some of the relations that we cultivated with larger, I would say, banks, is that they appreciate the ability of Fintech supporting them in acquiring new customers and then digitally onboarding those customers. So I think there's a lot of potential collaboration between banks that are looking to improve their digital journey and expedite their ability to onboard new customers, be it on the SME side specifically where we're focusing, but also be it on the consumer side, on the retail side. But I think the trend globally is that obviously you're going to see a lot of more digital banks emerging, especially I believe in places like Egypt and Saudi, there's quite a few emerging. In Bahrain, we have a couple, and then obviously I think there's some key digital banks in the UAE as well. So I think there's going to be a lot of that. But also I think there'll be a lot more collaboration with Fintechs on solutions with regards to onboarding, profiling customers, and then also providing some value-added services through the bank to these customer categories, specifically from our perspective with regards to SMEs.
Cool. Thank you. Thank you so much, Mohammed. We are moving on. We will get back to you again back in the Q&A. We're moving to the next session, which is about cloud-based point of sale. So we have Zaid. Great having you here, Zaid, today.
Thank you, Roberto.
Yeah, and so I will start from, with all the technological disruption, cloud-based POS has become really attractive, but do you think it will replace the traditional POS?
I actually believe, yes, it will replace the traditional POS. And to be honest, COVID really accelerated this as well. And I think soon enough, traditional POSs or legacy POSs will definitely be obsolete. And let me tell you actually why. And if we look, at the advantages of having a cloud POS versus a legacy or traditional point of sale, I think by the end of the advantages, then it will be very clear on why a cloud POS will supersede or replace the old traditional point of sale. Let's start with Roberto, the data, because data today, with the legacy point of sale, it is stored on servers that are physically in the store, versus if you have your cloud point of sale, it will be stored on the cloud. So what that means, if you have your servers in the store, it means if you need any report or you need to access your data, you have to be in store physically there. Versus if your data is on the cloud, it can be accessed from anywhere in the world. All you need is just a mobile, or because it works on a web link, so you need an internet and a device that can give you access to your data. And let's talk about data loss risk as well. So with the legacy or traditional point of sale, if the system crashes for any reason, or for any reason, the place that or the restaurant that you're operating was on fire or anything, then if the server crashes, it means you lost all your data. Versus if you have the cloud, your data is on the cloud, the risk of losing your data is definitely less, because your data is stored on the cloud and you have continuous backups that you take daily, so you can restore any data that you lost. And if you host your data with reputable companies, they have cloud centers all over the world, so it's very, very, very hard to lose any data. And in terms of the cost, so the model is a bit different. So if you look at the traditional POSs, they're more of a CapEx rather than an OpEx expense. So CapEx, by CapEx, it means you have to do the investment at the beginning. You have to buy the hardware, you have to pay for the software, which is expensive somehow, and then you have to actually pay maintenance fees yearly. With the cloud POS, the model is different. So you pay a subscription fee, which you pay either a monthly, yearly, but you don't pay a lot of money at the beginning. It's just more of an operating expense. And the advantage of that with the cloud as well, you'd have frequent updates. So it's like you're updating your application on Facebook, for example. So you get frequent updates to your point of sale. And with the legacy or traditional point of sale, you have to do the update physically. You have to go to the store. So it's not very scalable in terms of hardware, in terms of updates. Talking about hardware, if I want to compare the traditional POS versus cloud, the traditional POS is very bulky, is very hard to set up. versus a mobile, modern, and flexible point of sale, which has also a lot of options and features like, with payments in specific. So if you want to enable NFC payments or QR code payments, so it becomes, the hardware for the cloud POS is much more flexible when it comes to that. And last thing I want to talk about is scalability. So if you have multiple locations and your business is growing, with a traditional POS, it's very complicated, where you need an actual IT department to maintain your VPNs, static IPs, etc., for you to be able to connect multiple locations into one single dashboard. Versus if you're on the cloud, it's just connecting a tablet, or if it's a web link, then it's all connected to one single dashboard outside the box. So all these advantages for the cloud will definitely, there are enough reasons for the traditional POS to go obsolete. And the beauty of the cloud as well, that it works offline, because a lot of people are afraid of, if the internet goes off, what will happen to the operations of the store. Because it can store everything, or the data, it will be stored on the actual device locally, and then it syncs everything back to the cloud. So it does work fully functionality offline as well. So yeah, I believe very soon it will go obsolete.
Awesome, thank you, Zaid. Very, very clear. And you anticipated one of my questions, because we have read in, that there's some people, some businesses are worried about if the internet goes down, what happens, or they're talking about a hybrid approach with POS. But then I think it's clear. You clearly outlined the benefits and advantages of moving from on-prem or hosted servers to the cloud. Then, but what that would enable looking ahead? So what improvements can we expect from cloud-based POS in the, say, next 2 to 3 years?
All right, so if we want to look today as a point of sale, so having a standalone point of sale is definitely not enough. So there are different ways where I think, or I believe, the cloud POS will improve. The first and important part is actually having a full ecosystem around the point of sale. So what does that mean? So today, in terms of different functions, they're growing exponentially. For example, payments, HR solutions, logistics, customer acquisitions, they're really growing exponentially and servicing the same clients. So if you want to talk about restaurants, so today, if you go to a restaurant, you will at least find 4 to 5 different tablets from 4 to 5 different service providers. So one is for online food ordering, one is for like the loyalty program, one is for the payment, one is for the logistics, for the delivery. So they're all growing, but they're all separated. So the perfect spot for the POS is to come in the middle and allow all these service providers and applications to integrate directly into the POS. So you create, the full ecosystem has to be integrated to the point of sale. Why the point of sale? Because it is the point of truth. It's where the transaction actually happens. So the context of the transaction is within the point of sale. So at the end of the day, if they do not integrate to the point of sale, there will be a missing cycle. Let's take a loyalty program as an example. So if they're not integrated to the point of sale, they would never know what the customer actually purchased in terms of items. So they can't do any customized offers and promotions. They can know how much you spent in the store. So with the integration of the POS, then you would come up with a complete ecosystem. So we'd have an app store with multiple integrations, and then it's up to the merchant to select which applications they actually add value to his or her business. So that's number one in terms of integrations. And okay, let me also give you advantages of that. To both, we have the third-party service provider and the merchant as well. So the third-party service provider, with the integration, I actually, I lower my cost of acquisition, because with one integration, I can have access to thousands of merchants who can actually see my application, and I can, use it seamlessly and quickly. And also, it can give me the advantage of, scaling, being geography agnostic, so borderless, because today we're available in Jordan, Egypt, and Kuwait. And if one integration in Jordan is done, then they can serve clients in Egypt and Kuwait, instantly. So that is a big advantage to them. To the merchant, they're really streamlining the operations. So today, as I told you, you have 4 or 5 different tablets. You need a full-time employee who's actually taking all this data and then punching it again into the point of sale. So with this integration, you're streamlining all the operation and you're eliminating any human errors. Another improvement that probably we will see in the next 2 years is also having a till-less cashiers as well. So we've been seeing this in different stores where you don't have like a space for the till. You go and you pay it. So it's everything is mobile. You have the tablet with you. You have a wireless printer, so you can accept payments. You can do the transaction while you're standing with the customer. So you don't really have to have a till for the cashier. So that is the trend is definitely going there. And one advantage also, Roberto, that we will be seeing with the cloud POS is actually making use of the big data for small to medium businesses. So the big data that we have, a lot of machine learning can be done if you aggregate this data, and then you will definitely help the SME business owner take smarter decisions based on recommendation engines or menu insights, etc. So you can give them very valuable information to help them really take educated decisions to grow their business. So those are like the 3 main trends that we'll be seeing in the next 2 years.
This is exciting, Zaid. The future looks bright, and there is a lot of development ahead. So this is really exciting. So let's move on the final session before we open up for the final Q&A. The final session is Fintechs making money transfer a breeze, and we have 2 founders here, Kevin from HubPay and Mohammed from MamoPay. Thanks, guys, for joining. Great having you here today. I would start from Kevin. Kevin, it is true that when an individual sends money overseas, the banks do not offer a fair fee. Even the international B2b transactions, there are no relaxations given in terms of the fee on money transfer. So from your point of view, how fintechs are solving this issue?
Good afternoon, Roberto and panel. Good to connect with you all. I mean, how do you just define fair? I'm sure it's fair to the banks. It may not be fair to the customers. I mean, look, a number of banks certainly charge more than other international methods. And if we compare the kind of UAE or wider Gulf market to internationally, yeah, it probably is a bit higher, and it depends, which corridor, what type of transactions. I think it's also important to understand the true costs. What's the FX spread, what's the sending fee, and also what's the kind of receiving fee. You've got to bear in mind, I think, if you look on an individual level, there's a lot of users here sending money to people overseas who don't have bank accounts. So they may have a bank account in the UAE, but the receiver doesn't. So that brings in a whole kind of another layer of costs, which in fairness, banks can't control. The bank is the sender, it's not the kind of receiver per se. If you look at the UAE market, it's predominantly characterized by national banks, some regional, but predominantly national, but certainly not international global. It's not going to be the same bank sending in the UAE that is receiving in Pakistan or the Philippines. And the reality is that banks aren't really focused on transfers. That's not a business model. Banks don't make money by sending money away. They make money by holding on to it. So transfers and stuff are not really, yes, they're there to facilitate it, but the way banks make money is by offering at a retail level kind of consumer finance, whether that's loans, credit cards, mortgages, prime, subprime loans. So kind of transfers is not a core offering, and therefore it's not a core offering, they're not particularly strong at it. So I think, that's the kind of, when you focus around the whether that's fair or not, whether particularly great, that's the kind of reason why. Kind of moving on to B2b transfers, I think it's quite a different proposition than the retail market. It's going to be normally there won't be fees that'll be normally made off a spread. And I think if you're looking at B2B kind of transfers, they can be very reasonable in the kind of broader kind of sense of a financial relationship, because banks will be offering a business a number of transactions. I think where it's probably a bit I wouldn't use the word fair, but not really built around the consumers, probably the SME market. The transfers there can probably again be still quite expensive just due to the lack of international kind of competition, and probably due to the kind of lack of broader kind of facilities or products targeted at kind of SMEs. And I think you're seeing quite a lot of considerable change. If you look at other markets in this area, there's been a lot of fintech set up to target specifically B2B businesses. And why do fintechs do it better? Well, fintechs generally focus on one product initially, and they focus on doing it well. That coupled with a digital first, lean approach often means they can strip out unnecessary costs and make themselves more competitive and also just more user friendly. I think if you offered a kind of B2B solution in this market for SMEs that was built around transfers internationally, multi-currency accounts, effectively the basic products, but you made even the onboarding easy, you'd solve that problem straight away. If you look at, I think we've all gone through the kind of gauntlet of opening a bank account for ourselves. For those of us online who are running businesses and have opened up business banking accounts, it's a new world of pain. And so I think there's going to be, I think fintechs are going to streamline that process significantly. And you've seen it in other markets, and you're going to begin to see it here with a shift in regulation.
Awesome. Thank you so much, Kevin. Moving to Muhammad. Hi, Muhammad. Great to cross path again with you. We were, for the audience, we were at Google together for some time. So great to see the work you're doing with MamoPay. I've read that according to a survey by MamoPay, 87% of the people in the MENA region are unhappy with existing money transfer offerings. So what are the challenges that they face, and how a fintech like yours can solve them?
Yeah, so I think if you look at users in this market and how they predominantly exchange money, right? It can happen either typically through a cash or through bank transfers, right? Cash causes issues in itself in terms of, especially as people are starting to get used to using their credit cards or cards more frequently as they go out in stores, right? What ends up happening is often you are not carrying enough cash around, right? If you are carrying cash, then you might not have the change that you need to actually make those payments, and then keeping track of who owes what becomes problematic in itself, right? I think there is a drive, especially with what's happening with COVID, for people to just move away from cash. It's a trend that's been happening globally, but it's surprising how long it's taken the region to come out of that, right? Even for a market like the UAE, where typically quite at least well banked relative to the rest of the region, you still have central bank putting out a figure of around 75% of the economy being cash based, right? So there are definitely issues around that, and I think if you take the other primary method for people exchanging money, which is bank transfers, it can be very time consuming, right? And when we talk about time consuming, there are a couple of elements there. One is just doing what you need to initiate that payment, right? Initiate that transfer, right? You need to go into your mobile banking app or, into online banking. You need to actually go in, add a beneficiary. Often that can take a few hours to happen. You need to have, the other person's full banking details. Okay, what's your bank account? What's your IBAN, right? So the whole setup around this is actually quite overly complicated for a user, right? And even when you do get through all of that, right, there is still an element of, I don't know when the money will get to you, right? If it's, Friday afternoon, okay, you're probably going to have to wait until Sunday or Monday to receive that. So, and it's actually quite inconsistent from bank to bank, which leads to generally people feeling very uncomfortable with bank transfers. And what happens as well as a result of how time consuming this is people often, if you break it down to like everyday behaviors, people actually sometimes forget who they need to pay and how much they need to pay. And that in itself can create some sense of, shame and issues between people. So that's why, at MamoPay, our goal is really to make everyday payments simplified, right? Whether you are paying your friends or family, whether you're paying, a small business or an entrepreneur that you're buying goods or services from, right? Or whether, you're fortunate to have a family and a helper at home supporting you, right? All of these everyday interactions that you make, we want to make them as simple as possible through MamoPay. And really what a fintech like ours brings is just an overall friendlier and easier experience for the user, right? Easy to set up and get onboarded, easy and fast to actually send money. No need for, remembering IBAN details and sharing them. You just need your phone number, your email to start sending money, and payments are instant, right? And so you no longer have to worry about who owes who. All have, you know, and I think specifically in a society like ours, where money can be quite a sensitive topic, right? You want to make sure that money doesn't get in the way between friends.
No, great, Mohammed. Yeah, absolutely. And there is a huge opportunity there to simplify and provide a better user experience, which is great. And the job you're doing is really awesome. Maybe just a final question before we hand over to Mohammed for the Q&A. For both of you, Kevin, Mohammed, despite the technological advancement and say attractive offerings by the fintechs today, people still incline towards direct bank transfers or other traditional methods for large B2B transactions, for example. So how can fintechs surpass this notion? A short answer from both of you, and then we'll go through the Q&A.
Sure. I mean, I think, look, if you're doing kind of large B2B transactions, you should be able to kind of negotiate relatively decent rates with a kind of bank. But you know, it's not always the case. I think if fintechs are looking to operate in that space, how they're going to start kind of making kind of moves in the kind of market and kind of winning kind of market share, they're going to have to do more than just a transfer model. There needs to be a kind of broader solution and relationship play, whether it's kind of multi-currency accounts, basic derivative offering, or liquidity solutions. It's going to have to be more than just a kind of solid UX proposition and kind of good customer support. And if you look at other markets where there has been major inroads in the kind of B2B market by fintechs, like sort of Ant Financial in China, who are now coming across the region in a significant kind of way, they've built a broader solution, and they've done it product by product. So they've done one product initially, they've executed it very well, then they've done the other one rapidly. But they've also had a very resilient and kind of deep and robust understanding of the financial kind of markets. Then it's not enough just to be kind of tech provider in the space. So yeah, I think they can do it. I think you need to be far broader than just doing a transfer.
Cool. Mohammed?
Yeah, I would echo what Kevin says, and I think on top of that, so we're not specifically going after the B2B payment space as MamoPay. We focus more on consumer to consumer or consumer to business. But I think one interesting thing that we're finding is, as we go after merchants looking to accept MamoPay as a payments method, is often, you know, that sort of line between what is a merchant and what is a user can become, our consumer can get a bit blurred. You know, I think there's a huge segment of, you know, your freelancers, designers, solo entrepreneurs who are going after, who are trying to find easier ways to make these payments happen, and they're, you know, taking the same approach of, okay, let's make it as simple as possible for a user to start using MamoPay. It's the same mindset that needs to be there for small businesses and merchants as well, right? They are users in their own right. I think that's important, sometimes lost.
Yeah, I agree. Cool. Let me thank you, all of you, for you know, your insights during the 4 sessions, and I will hand over now back to Mohammed for moderating the final Q&A.
Thank you so much, Roberto, for leading the session all the way forward, and all the speakers we are actually trespassing through very stringent and very information that is very well suited, not only for the MENA region, but for the global audience. So let me start with the Q&A session. We have a few questions here, and the first one is for Mr. Hussam. So Mr. Hussam, the question says, Fintech saw growth in terms of the number of VC funding deals in the first half of 2020, but in terms of the funding share, it is nowhere in the top 5 sectors. Do you think COVID-19 is the reason behind this? The question is regarding fintech startups overall.
I don't think it's COVID-19 is the reason behind that. I think it's just where fintechs are today compared to some of the other sectors is we're mostly at early stage right now. So most of the fundraising that has happened in the fintech space in our region has been early stage, as opposed to some of the more developed areas in the ecosystem, meaning, you know, e-commerce and some of the other sectors that we've seen deeper investments in. So I think it's just a kind of where we are in the timeline of fundraising for the space rather than anything else. That's my quick answer.
All right, thank you so much. So the next question is for Mr. Mohammad Vifati. So Mr. Vifati, with digital lending, there comes a need of Sharia compliant banking. Do you think both Sharia and conventional banking norms could coexist? And how can fintech solutions make Islamic banking transactions competitive?
Thank you for that. It's quite a heavy question. I think in general, Islamic banking has obviously multiple facets and multiple different types of structures, and it depends on the type of lending we're talking about. But if I can draw a very specific example, for example, Murabaha loans, which is one of the most established contract in Islamic banking, when you see the underlying structure of some of the Murabaha contracts, it's mostly asset-based lending. So banks have to purchase assets, then they have to push it onto their balance sheet and then to the beneficiaries. That adds a layer of cost, both in terms of time, but also in terms of the actual cost of the transaction. That definitely makes them, in some cases, less competitive with conventional banks. And I think where fintechs could help is again, reducing those costs, be it the onboarding side, be it the end-to-end loan process. And we as a fintech, we focus quite a bit on that. So a lot of what we've done on work with Islamic banks is on that aspect of digitizing the loan administration side. So I think there's a lot of innovation that can happen in this space. And I believe over the next couple of years, you'll see that there's going to be a lot more sentiment towards, especially on the consumer lending side, that Islamic banking transactions will be more competitive cost-wise and time-wise vis-a-vis conventional banks.
All right, thanks for the extensive answer, Mr. Vifati. I don't think that the question was heavy for you. Thank you for answering. Thanks for the wonderful answer. So next we have, it's a very common question. So I am putting this question forward to the whole panel, so we can have multiple answers from multiple speakers on this particular question. So the question says, what lessons or mistakes are you trying to avoid from Western experiences with fintechs? Would you like me to repeat the question?
I can take that one. It's Kevin here. Yeah, I mean, I think I saw that question in chat. I think it's a really prominent one because we spoke to a UK VC on this the other day. Some of the fintechs in Europe right now, as a good example, have had significant valuation corrections. And some definitely are overvalued, but some, the underlying financial model, the unit economics is questionable. You look at N26 in Germany, multi-billion-dollar valuation business now, financial technology partners have raised most of the funds for it. It's losing $59 per user per year. So any fundraising is literally going to offset what is effectively a loss-making kind of gross model. Forget the kind of central cost. It's at gross level. It's hemorrhaging cash. You know, the question is right now is the fintechs in that market, they've done well at going, okay, well, like Revolut will create a multi-currency card where you're crossing borders, and whether in euros or sterling or any other kind of currency, it's convenient. But are you really going to take a mortgage or a credit, you know, maybe a credit card, but are you going to take the kind of core kind of financial products where the big banks make all the money? It's questionable. Revolut doesn't even have deposit insurance. It's not a category 1 licensed institution. So that's the challenge, I think. I think fundamentally, if you look at emerging markets, and I certainly identify MENA as emerging kind of market, there is a significant opportunity. We heard colleagues, you know, at MamaPay and hosts and that, you know, by now kind of pay later business at Tabby. There is significant opportunity both within the kind of Gulf market, cross-border, how the MENA market increasingly links in with the Asian market, where the dynamics are just completely different to the Western markets, and therefore that creates more opportunity, and I think more sustainable fintechs.
So I think that's a great answer. So I request other speakers. So
on that point specifically. Can you hear me?
Yeah, we can hear you.
Yeah, on that point, Kevin, as well, I think what we don't want to do in our space is follow in the footsteps of what happened in the e-commerce space over here and over the last 4, where it really became a bloodbath to the bottom on pricing to the consumer, right? And essentially what happens is everyone loses, and we destroy what we're trying to build before we even get there. And I think that's, to your point, Kevin, some of what's happening in Europe today, where it's where they're building. We saw that right now, I think most recently with AWOC in the region. We've had a few shutdowns in the e-commerce space, and that's primarily driven by a race to the bottom, and that's something none of us know.
All right. So
yeah, one thing I'll just add to what Hussam and Kevin have said as well is there's also the reality.
Back to you, Mohammed.
Yeah, there's also the reality that when we look at the MENA region, although we talk about a large population, it's actually spread out across multiple countries, right? And even when we think about scalability and how we scale, that's really a different dynamic than what you would do in the West, right? A lot of markets, for instance, if you take the US, just do one thing and then scale it up over several years, and you have a 300 million population there. All right, that's great, but the reality is very different out here, right? And if you're doing really well in 2 or 3 different markets, the point is, how can you increase the scope of your relationship with the customer over time if you really want to be able to build a profitable business over the long term.
all right, so that's a great answer. So I think, should we move ahead with it? So there is a very general question that says, though fintech looks promising in terms of ease in money transactions and setting up of businesses, how vulnerable is it to hacking, and how will fintech convince these potential customers to trust them with their hard-earned money? It's a very common and broad question, but it is related to, I guess, hacking in terms of money transfers that happens all across, not only in the MENA region specifically, but it's a general question. So anybody in the panel, it's an open question, so you guys can speak up individually. Anybody wants me to repeat the question?
I'm happy to go first. I did have my CTO here talking about everything we do around encryption and doing that. But I think there are a couple of things to keep in mind. First, when you are working with a money transfer business that is regulated, right, there are obviously stringent requirements that we have to go through to make sure that the security of our systems are in place, right? So there's a lot of what you do in terms of encryption, two-factor authentication, in terms of actually building out risk engines and fraud engines to make sure that you're able to catch any suspicious activity early enough, right? That goes into it. There is also a portion of a part of it which is around just making sure you're continuously educating users around what they should and should not do. The importance of accessing the security of how to keep their login credentials safe, how to enforce levels of password protection that are high enough, because often a lot of the hacking actually comes in because users have sort of not taken the necessary actions on their end. So you need to tackle both of these in parallel, I would say.
All right. So moving forward, any other speaker out of our panel today want to address this question, or shall we move ahead?
I just want a quick comment. I think just to second what my colleague was saying. I think we are in a regulated industry, and by definition, we all have compliance and protocols that we follow in terms of data security and protecting against cybersecurity threats and so forth. But I think it goes back to some of the basic things, as just to re-echo what the previous speaker was saying, is that it comes down to educating the user that they need to take basic steps to protect their identity, the ID, and also using a lot of very basic verification steps such as OTPs and so forth. And these type of very basic, simple actions can significantly improve reducing the risk to our customers. But ultimately, we are all regulated entities, and by definition, that should enable customers to entrust us with the transactions that we're executing.
Thank you for the wonderful response, Mr. Wafati. So let us just move on to a couple of more questions since we are running close to the end of the webinar today. So there is one question that says, do you think online asset management solutions are needed in the MENA region? And are they lacking anywhere? Additionally, how can they integrate with the service your respective companies offer? So it's again a common question, and individually all panelists can answer this. If you...
Yeah, I can quickly come in. I think it's an relatively easy answer to that question. You've already got all of our, I think most of the other panelists would know the team, but the team at Sawa, who are doing effectively robo-advisory and doing a very good job. One of the early fintechs that went through the DIFC fintech hive. You got Mark, Nadine, and Jad in the team there, who have built a very successful business, and you know, we're good friends with them from HubPay here. I think they've shown a very strong ability to build a kind of robo-advisory and asset management business. And I think if you actually look at kind of robo-advisory businesses internationally, they've been very successful because they've just stripped out so many unnecessary fees. The reality in asset management is that most of the time is you're best putting your money in an index tracker rather than active management, especially as a kind of retail investor. It's because actually, if you look at the kind of long-term trend line about how much money is eaten up on fees, that kind of negates the benefit you would get in active fund management. So I think you've already seen that in the market taking hold, and I think it's been quite a success.
Right. Thanks for the answer, Mr. Kevin. So anybody else want to speak on this? And otherwise, we'll move on to one final question and we'll wind up with this webinar. All right, so let us just move on to our one final question. And again, it is a very important one. Will the future of fintech across the region be driven by user population sizes in large countries with specialized advanced countries like Bahrain that have historically been financial centers? I repeat the question again. Will the future of fintech across the region be driven by user population sizes, especially in Bahrain? Because it is, yeah.
Let me have a probably quick answer, because there's a difference between fintech and financial inclusion. So I think financial inclusion is more towards countries with bigger population. So you know, you need to actually change the way that they transact. So you need to give them, because the majority of the population, for example, in Egypt is unbanked. So you need to find ways for them to overcome this challenge of opening a bank account. So this is where it becomes, you need a bigger audience or a bigger population if you want to do any financial inclusion activities, which lies under fintech at the end of the day. But if you want to do financial technology, like opening a digital bank instead of you know, having a regular bank, then I don't think it becomes relevant to having you know, a big population in that country or not. So that's just my quick intake.
Thank you so much for the wonderful answer, Mr. Zaid. So I think we are good towards winding up with this session. Finally, I would like to thank all the panelists and all our strategic partners, Daily Hunt, Microsoft for Startups, and Andra PR for empowering us for this event. And I'm putting in the feedback survey form in the chat panel. So before exiting, so I request everybody to fill in this form. It will only take a few moments. And thank you so much, everyone. And we at LAFFAZ are looking forward to partnering again with all of you and making more such wonderful sessions live again soon. Have a nice day. Have a great day ahead, and stay safe, stay home. Thank you.
Take care.
Thank you.
Thank
Take
you.
care. Bye bye, everyone.
Thanks a lot.
Thank you.